All right, joining us today, we have Mayuresh Joshi of William O'Neill and Rahul Sharma of Equity 99 Advisors to answer all your stock queries. Gentlemen, good afternoon. Hope you're having a good day. And without wasting any time, let's go across to our first caller. Arvind calls us from Bengaluru with a query. He has investments in ONGC. Arvind, go ahead. Okay, all right. So basically, I'll just read out his query for the benefit of our viewers. He has bought 235 ONGC shares at 85.5 rupees per share, and he currently has a loss of around 2,900 rupees per share, and he needs an advice as to what to do next. Mayuresh, let me come across to you for this question. The entire oil and gas pack has been underperforming this year. Globally, there has been some pressure on the demand as well, and we're not seeing that margins otherwise also have been inching up. What do you suggest Arvind should do?
Afternoon, Sonal. Afternoon, Mangalam. So clearly it's a perspective, right? And if the perspective is long-term, maybe the scenario might change next year as oil prices might rebound. But at least from the near-term perspective, realizations both in terms of nominated crude prices, the JV prices of crude as well, and even the gas prices on a GCV basis on a year-on-year comparison have been down significantly. So on a USD barrel dollar basis at from 60, 61, the realization was almost 41 odd for crude, and for gas as well from 3.69 close to 2.39 odd. Now when you're probably looking at volumes, the volume increase also has not been that significant, while the capex probably still persists. So yes, I think dividend yield might be one of the criterias, but are we really expecting global crude prices and gas prices to bounce back very, very sharply over the next few quarters? I think it's still expected to be a range-bound trade, which means that the earnings profile might not really improve for all these OMCs as well as the upstream players, including ONGC and Oil India. So I think as per our O'Neill methodology, the earnings rating, the EPS rating, the master scores remains very, very poor. Our own take is look at growth stocks. So look at growth stocks within the chemical space, the cement space, or even the financials, the larger private banks. I think that is where the earnings momentum is.
But let's move across to our next query. Roshni S writes to us from Mumbai on behalf of her father. He holds 5,450 shares of Reliance at an average price of 385 rupees per share. He's been concerned regarding the short-term fall in the stock, and he wants to know whether to hold or sell. Well, first of all, Roshni, congratulate your father from our behalf. That has been a great performance by the stock since the time he's bought it, and I wish we could speak to him in person and congratulate him. But nevertheless,
I was just doing some math actually. When they bought it at 385 rupees, it was 20,000 rupees, close to 2 lakh rupees, sorry. 2.1 lakh rupees is what they invested. The current value of the portfolio is 1.04 crores. That's only in Reliance. That's right. 83 lakh rupees out here that they're making in terms of profit.
Yes.
So big money.
Oh, absolutely. And that is what long-term investing is all about, right? But of course, we'll get a view from Mayuresh, of course, as well. He's worried about the short-term blip, Mayuresh. What do you advise him to do?
I think you should absolutely hold on, Sonal. I think the power of compounding has worked wonderfully well, I think, and that's a key example for a lot of investors into the market. Short-term blip, maybe because of a few overhang factors, what happens with the future deal, the Amazon suit, and so on and so forth. But really, I think the kind of money that has flown into both their platforms, the monetization of the Geo platform, what they're monetizing in terms of the retail platform as well, the enterprise valuations that they're getting for the retail platform. And again, I think the deal from Aramco on the oil to chemical business has still not got called off. So I think if that deal is still in the works, which means that if cash still comes through and the entire conversion of oil to petchem, where the margins are better on a per barrel basis, that will provide further earnings momentum to the stock with a longer term perspective. Yes, I think price action has been a little sticky over the last few weeks for Reliance, but looking at their buying price, I think a definite hold from my side. Our own methodology suggests that price strength, if they want to add on more, should be there in the stock, and the underlying price strength would at least come down to that 2,100 odd levels, where she can add more. The longer term story obviously stays put for Reliance.
Very interesting. You know, Just Dial has been one of those extremely volatile stocks. Back in the day, 2014-15, I remember it used to be close to around that 1,800 rupees odd mark, and saw a big dip. This year itself, it hit a low of close to around 250, 260 odd rupees. From there, we've seen a big jump. He bought it about a year ago. He's sitting on some profit, Mayuresh. Most of the profits actually came by just in the last 1 month because of this massive rally that we saw in the stock. Your view on the fundamentals of Just Dial? Yes, they do have a fair amount of cash on their books. Yes, there is that B2B foray that the company is into. But from a longer term standpoint, JD Omni was a failure. You have Google, and the relevance of the business is the big question. What's your view?
Well, you're absolutely right, Mangalam. I think the JD Omni probably did not work out as was expected. And the other competitors in terms of the apps, look at the number of apps that we've got on our smartphones. So for travel, you've got an app. For movie bookings, you've got an app. For hotel bookings, you've got an app. For eating out at restaurants, you've got an app. So I think where the space was left vacant a few years back, I think the delay in terms of the addition from a digital perspective probably took its toll. Yes, there is cash on its books of almost 1,400 odd crores. The margins have improved on a quarter-on-quarter basis to 32 odd %. Paid subscribers still stand around 4,48 odd thousand. But I think the B2B platform and how do they monetize that, clearly, as Rahul was mentioning, in terms of their competitor IndiaMart, which has been able to do that very, very successfully. I think these points are something which are acting as headwinds, and they probably act as somewhere, I think the earnings momentum or shift probably does not happen in the right direction in terms of the consistency of earnings growth that one looks at. So you can look at holding on to the stock, but look at the quarterly updates. I think if there is some issue in the next couple of quarters, you can very well look at the other sectors that we probably discussed.
All right, Mayuresh, thanks for that view. Let's go across to our next caller then. Shankar Rao is calling us from Bengaluru again with a query. He has investments in Ircon International. Go ahead, sir.
Hello.
Yes, sir, go ahead.
Thank you for putting me on air.
Yeah.
I'm Shankar Rao. Yeah, I bought 3,000 Aircon at 93 rupees, and it has gone down, and it is recovering now. And the prospect of this share, should I hold or should I sell?
Okay. Mr. Rao, when did you buy this share? How much time have you been holding it for?
About 4 months. August 2020 I bought.
Okay, all right. So, Mayuresh, let me come to you on this stock. It has fallen from the highs of 600, has been an underperformer this year. What do you suggest Shankar, Mr. Rao should do?
No, so again, I think it's a classical PSU story, Sonal. I think the earnings delivery and the consistency thereof probably does not come through. They have guided post their first half results of a 10 to 15% growth coming back in the second half, and that consistency probably expected to get maintained. But execution thereof remains extremely critical and key for all these companies under consideration. For Ircon, I think the order book is quite reasonable. There are no two ways about it. Dividend yield in excess of 5 odd %. So I think those are positives that I probably see in the stock. EBIT margins have come off. So if you probably look at historical margins in excess of 25 odd %, they've probably come down to that range of 14 to 16 odd %, which has dragged the equity or the return on equity down to that 10-11% mark as well. So I think how the execution probably plays out for Ircon as a stock is something to be seen. And that will be seen from numbers itself. Institution holders have probably been a little bit twitchy about this stock as well. And the price strength and earnings strength has not been consistent because of the inconsistent delivery. So yeah, I think it's about a perspective as well. My own sense is price strength will still need to be taken out from an earnings delivery perspective over the next few quarters. If that probably doesn't come through in the next couple of quarters, you can probably well look at other stocks. So I think the eco-related stocks, something like cement, something like home improvement, I think those are the spaces where earnings momentum can really come back with a look.